What if I told you retirement doesn't actually take 40 years like everyone thinks? In fact, if you follow 8 proven steps consistently every single month, you can retire early. And using 24 years of investing experience, I'm going to break it all down in simple English. In just a few minutes, you'll know exactly how ordinary people in the UK are retiring in their 40s and 50s without a trust fund or a six-figure income. Step 1, why most people never retire early. Most people imagine retirement as simple. Work hard, save a bit, invest a bit, and one day you'll finally slow down. But here's the invisible trap. Progress feels painfully slow at the start. You work, you pay the bills, maybe you save a few £100 each month, and when you check your account, it barely moves. That's when most people give up. They assume it's not working, but it is. They just quit before the magic actually happens. Compounding is like pushing a snowball uphill. Hard at first, frustrating, but if you keep pushing, one day it tips over the hill and suddenly it's unstoppable. That's when your wealth starts working for you. Compounding is one of the most important things you will ever learn about money and wealth, building wealth. And if you want to learn all about it in much more detail, see below for a recent video. Step 2, the maths that changes everything. The rule of 72. Here's the little known rule that explains why compounding works. The rule of 72. Take 72 divided by your average annual return, and that's roughly how many years it takes your money to double. So with a 10% average return, like you might get from a simple global index fund, your money doubles every 7 years. Now, imagine this. Start with 50,000. In 7 years, it's 100 grand. In 14 years, 200 grand. In 21 years, 400 grand. By 28 years, 800 grand. 35 years, over 1.6 million. The curve explodes at the end. The problem, most people stop during years 5 to 10, when the returns still look flat. They stop right before it takes off. Now, if you are serious about early retirement, hit the subscribe button and I'll do everything I can to help you get there. Step 3, why saving alone won't work. Saving money is smart, but it's not enough. Let's say you save £400 a month and earn 8% a year. In 10 years, that's roughly 75,000. Respectable, but not freedom. Now imagine you earn 5,000 a month and save 20%. That's £1,000 a month invested, turning into around 190,000 in the same time frame. See the difference? Wealth doesn't come from cutting coffees or skipping takeaways. It comes from combining offence and defence, earning more while still spending smart. Every pound you earn is like an employee. You can waste it on lifestyle inflation or send it to work through investing. One path looks rich today, the other makes you free tomorrow. As always, nothing in this video should be taken as financial advice, and the full disclaimer can be found below in the description. Step 4, building a portfolio that actually works. Once you're saving, the next step is where to put your money. If you leave it in a current account, inflation eats it alive. If you throw it all into one risky stock, one crash could set you back years. So think of your portfolio like building a house with 3 layers. Bottom layer, growth assets, global index funds, UK equities, or even ETFs like the FTSE Global All Cap. This is your engine, the part that compounds over decades. Middle layer, income producers like dividend stocks, REITs, or even buy-to-let property, if done right. These pay you while you wait. Top layer, stability and protection, cash reserves, premium bonds, maybe some gilts, bonds or gold. This layer keeps you calm when markets go tits up. Your exact mix depends on your goals and risk tolerance, but the key is balance. Without all three, your financial house could collapse when life throws you a little curveball. Step 5, beating inflation, the silent killer. Even if you build the perfect portfolio, inflation is your enemy. At 3% inflation, your money loses half its value every 24 years. So what's the solution? Don't just save, increase your contributions each year. If you invest £1,000 a month now and raise that by just 3% a year, you'll end up with hundreds of thousands of pounds more over 2 decades. In the UK, using tax shelters like an ISA or SIP makes this even more powerful. Your returns grow tax-free, meaning you keep every penny, every pound of that compounding snowball. Step 6, measuring progress the right way. Here's where most people get discouraged. They stare at their total balance, 20,000, 50,000, 100,000, and they think that's nowhere near enough. But you shouldn't measure wealth by your balance. Measure it by freedom units. If your monthly expenses are like 3,000 and your investments generate £300 a month, you're already 10% there, 10% free. That's like 1 day a week. You'll never have to work again. And as your investments grow, those freedom units stack up until your portfolio covers your entire lifestyle. Imagine that. Step 7, the magic number. How much you actually need. Here's the simple rule. Take your annual expenses and multiply it by 25. That's your financial independence number. At a safe withdrawal rate of 4%, that amount can cover your lifestyle indefinitely, everything. So if you spend 40,000 a year, you need roughly £1 million invested. That's it, you're free. If you want to retire early or be extra safe, use 3.5% instead. So close at 1.15 million. Now that might sound massive, but remember, you don't save anywhere near 1 million. Compounding does all the heavy lifting. Your job is just to feed the system and not interrupt it, to keep going. 8, the income multiplier, the real shortcut. Here's where the timeline collapses. You can't budget your way into wealth. You need to grow your income. If you earn 40,000 and save 20%, you're investing 8,000 a year. But if you grow your income to like 80,000 and keep the same lifestyle, you're investing 16,000. That's one move. That one move halves your timeline to freedom. High value skills like finance, coding, entrepreneurship, design, or even content creation like YouTube are your cheat codes. Combine specific knowledge with leverage. As Naval Ravikant says, and you'll multiply income far faster than you ever could by cutting expenses. The 20-year plan in action. Let's bring it home with a real example. Meet Sarah. She earns 50,000 a year, saves 20% and invests 10,000 annually. After 20 years at 10%, she has around 604,000. Many people could retire on this amount using the 4% rule. And if you're not exactly sure what it is, see below for a recent video. Now meet David. Same start, but he builds new skills, increases income to 80,000 and still saves 20%. That's 16,000 invested yearly, worth over 966 grand in the same time frame. Same discipline, same strategy, the only difference, more income. But what if you want to retire in just 10 years? Well, if you see below for another video, you'll see how you can potentially retire early by investing £500 a month into Bitcoin. Notice the word potential, because nothing in investing is guaranteed. Whether it's index funds or an aggressive, higher risk strategy like Bitcoin, it's very possible to retire early. You grow your income, control lifestyle creep, invest consistently and protect your gains. At that point, retiring early isn't luck, it's maths. Summary. Yes, you can retire early with index funds if you have the discipline to invest long term. You have to invest for long periods like 20 years or even longer. But if you want to retire even earlier through investing like in 10 years, to do this, you're going to have to go higher risk with an asset like Bitcoin. Whether you prefer index funds, Bitcoin, or maybe both, like me, it doesn't really matter. What matters is that you invest into assets. To drive home this point, I'm going to give you a very personal story, close to my heart. My dad is someone I love with everything I've got. And watching him struggle in his early 60s is painful to watch. He needs to work 6 or 7 days every single week to build up his pension pot because he hasn't got much saved for retirement. Not only that, but he needs to get 2 new knees, and as he's got other health issues as well. And he's finding work harder and harder. Looking back, my dad has had some really good jobs and could have easily saved £500 a month every month over the last 30 years. Let's make some assumptions. If he'd have invested that money every single month into the SP 500 or similar with average returns of 10%, he would have ended up with over £1.1 million. He would have been retired 100%. He didn't invest, and the main reason was zero financial education. If you are serious about early retirement, see below for a recent video. All I would say, you've got to invest into assets. It's important. It's because of inflation and the broken financial system. Thanks for watching.